Meanwhile, the U.S. Personal Consumption Expenditures Price Index, which is the Fed's primary inflation reading, rose 0.1% for the month, putting the annual inflation rate at 2.3%. And this is according to a Commerce Department report. Excluding food and energy, core PCE posted respective readings of 0.2% and 2.7%, compared with estimates for 0.1% and 2.6%. Consumer spending and income showed further signs of weakening, falling 0.1% for the month, while personal income declined 0.4%. Those were some of the news making headlines for this hour, but for these and more market news, do visit our website on CNBCAfrica.com. It's back to you, Godfrey.
Thank you, Karabo. Let's talk about those markets. As I said, it looks like the JSE is going to completely miss out on that party that we're seeing globally. In the US, the S&P is at a record. In Europe, those indices, the benchmark indices, are close to 1% gains, while in Johannesburg we're down 1/3%, largely on the back of...
So I do think it's important that we get clarity, A, that there's not going to be an increase in inflation, or B, if there is...
Of gold miners. Let's head back to Johannesburg to join Keiran Witthuhn. He is Portfolio Manager, Robert Cowen Investment. Keiran, thanks very much indeed. Is the easy answer the fact that we are seeing the metals, that we rely on the JSE, your silver, your gold...
seem to be, okay. The ceasefire has managed to hold. How are the markets taking the news?
Good morning, Emily. It seems to me that markets have...
And of course, your platinum under pressure. The reason why we're not joining the rest of the world in inching up this Friday.
Good afternoon, Godfrey. Good to be on the show. And no doubt about it, weakness in the gold price after reducing geopolitical tensions, definitely weighing on the rand a bit and also weighing on the local market. We've obviously been buoyed by the gold price, by the platinum price, but a short-term headwind this week, as I said, those geopolitical tensions really just reducing around the world.
Yeah. So let's talk about that reduction in tensions. Of course, that's on the back of the U.S. president, the U.S. government overnight announcing that they had a trade agreement with China, though many people are still skeptical. So what's the market's pricing in here in terms of the possible outcome? Complete cessation of hostilities in terms of trade between the U.S. China, or perhaps this is making quick bucks and then waiting and seeing?
Yeah, it's an interesting one. I don't think the market quite knows what to make of it yet, because as it's been announced, it's more of a trade framework than the definitive details. So I think we have to wait for the details to come out around the China trade policy. But at least, they're talking again. It seems like the rhetoric has been reduced, the heat of it reduced, and it's been toned down, and it's becoming more practical, pragmatic. So that is what we like to see, of course. And I think the U.S. administration is eager to now get a lot of those trade deals signed off. They've made one with the U.K., constructive talks with the EU this week at the NATO conference. I think Trump largely constructive with the EU leaders, which is obviously good to see. There's talks about an India trade deal. So I think that the markets, there's more clarity, should we definitely say, than about a month ago. The rhetoric's being toned down, and I think, we're still going to have tariffs. There's no doubt about it. I've heard estimates of an effective tariff rate from U.S. exports of about U.S. imports of about 14%. So that is quite a significant increase. We'll have to see who stomachs those tariffs. But, I think companies are able to operate in an environment where there is trade certainty, even if there are tariffs in place. They just need that certainty. And until there is that certainty, businesses obviously have been holding back on the investment. But the market's welcoming the China news today. And just one of the many reasons why equity markets continue to climb higher, as we know, all-time highs today, surpassing the February highs.
Indeed, indeed, and I was going to say, in the real world, of course, these tariffs are beginning to cost, because we saw also overnight Nike announcing that those tariffs are adding $1 billion to its cost. But let's put that aside, because the other factor in the market is also this suggestion that President Donald Trump is thinking of ending the term of the Federal Reserve Chairman, Jerome Powell, a little early and bringing in a new guy. And yet the market appears to be shrugging this off, not concerned. Or is that a misread?
No, I think you're spot on, Godfrey. I think the market is almost taking Trump less seriously, I think, and just it's becoming day to day just another news story every day with Trump in the White House. So whilst it is important, of course, you know, there should be independence of the Federal Reserve. I think the market just becoming familiar with this sort of story now, and it's not also a new story. So we know that he wants lower tariff interest rates, and he thinks that Powell's been too slow to act. I must say the calls are growing louder for the Fed to now cut interest rates beyond just the White House. And I think that pressure is going to start getting to the Fed. But I would not be surprised if there's a story in the next few weeks of Trump replacing Jerome Powell with a new Fed chairman. And obviously, I think Jerome Powell's done a very good job. We look back how he handled the post-COVID inflation. But there's no doubt that Trump administration will want a new Fed chairman that is definitely loyal, first of all, wants lower interest rates, and I think someone who thinks out of the box. That is kind of what this administration is going for. And it will be interesting to see how markets deal with a Fed chairman who thinks outside the box.
Absolutely. And also a Fed chairman who may be seen as pliant to the demands of the president, whichever way he acts, because of the quarrel that has taken place before he's come in. Anyway, let's come back and talk local politics as well, because that's been playing into this market, isn't it? Yesterday we saw the president, for the first time in his term, firing a deputy minister for insubordination. He cited two previous examples where this was done. The first one by former President Nelson Mandela, and then the other one by former President Thabo.
He told Bloomberg that a muted tariff impact may open the door to rate cuts in the fall, and she's not seeing warning signs in the labor market. Now, this is very interesting. Futures markets have been pricing in
Bombeki. But the question I really wanted to put to you, Keiran, is essentially the president has dared the DA, the Democratic Alliance, to walk away from this. And the markets appear to be saying it doesn't matter. Is it? Does it?
Godfrey, I think I'll give a relatively similar answer to the US story. I think there's just so much political news, topsy-turvy news, week in, week out, in both the US and in South Africa. And I think it's to be expected with a government of national unity. So, yes, it is relevant. These can be significant. But I also think it's just another day in the life of a government of national unity. I think these things are to be expected. I think it's gonna be tough for both parties to agree on everything. So this will definitely happen. But as we've seen, the rand largely shrugging it off as well. And I think there's obviously more longer term structural sort of tailwinds that South Africa is experiencing at the moment, like our budget surplus, obviously for the second consecutive quarter, I think first time in a very long time, 15 or 16 years. So I think those are the stories that the market is maybe more concerned about. And I don't think this poses a serious threat to the government of national unity. But news flow does change quickly, so I hope I don't live to regret those words.
Absolutely. I definitely get you and hear you loud and clear. The market is going to shrug this one off as the normal noise that you would find in a government of national unity, especially a unique one in this instance in the South African case, where we haven't had two very, shall we say, big parties coming together and governing, and each needing the other in order to stay in government. Keiran, let's leave it there for today. Thanks very much for joining us. That's Keiran Witthuhn. He is Portfolio Manager, Robert Cowen Investments, with our Market Watch for today. On the JSE, as I say today, we are down. We are backing the global trend, where we have seen global markets gaining on the back of that announced